take a look at one particular pocket which is under pressure today in the markets. Bharat Forge is a stock down over 7%, and even Ramkrishna Forgings, that is also under pressure. They both are down in trade as North America Class A truck order numbers come in at the lowest since September 2017. Sonia will give us more details on how it really impacts the companies. What is the kind of revenue they land up losing?
Yes, in fact, the reason why the stock is under so much pressure is because this data has come as a negative surprise. Remember, this month, the month of November, they saw about 27,900 of North American truck orders. In the month of October, it was 43,000. And at that point in time, FTR, which is the company that does this research, had indicated that the demand for North American trucks is very strong and will continue into the second half of the year. So the November orders falling to 27,900 has come as a bit of a shock. In fact, it is 34% below the 2018 monthly average. So on an average, the monthly intake has been 42,600 units, and now it's fallen to this level. Now, ACT Research, which gives out this data, has said that November has a seasonal factor, because of which the actual data is moderately lower when seasonally adjusted. They haven't given out any reasons on a demand fall, etc. So what we need to see is whether this is just a one-month blip or is it a structural slowdown the commercial vehicle space is seeing. Now, Bharat Forge gets about 13% of their revenues from the North America truck market. Ramkrishna Forgings gets about 20%, and hence these two stocks are impacted.
All right, so that's an important pocket to look at. Thanks, Sonia, for that. But you have more details. In fact, the news that you broke sometime back on Kesoram Industries, that has been announced. Take us through more details on that.
Yes, in fact, Kesoram Industries has finally announced the demerger of their tyre business, as we were telling you earlier. The eventual plan is to list Birla Tyres, the name under which they sell CV commercial vehicle tyres. The demerger date is the 1st of January 2019, and the rationale behind the demerger is to realign and recalibrate operations. Eventually, they are looking to add a strategic investor. That's what they've mentioned in their release as well. Now, the reason why the stock is under a lot of pressure is because despite the loss-making tyre business moving out of the books, the Kesoram group is still sitting with a huge debt concern. Now, the total consolidated debt on Kesoram's books is 4,200 odd crores. The tyre segment liability is almost 852 odd crores. So 850 crores of the tyre debt will move out. 17% of the total group liabilities will go into Birla Tyres post the demerger. It will still have liabilities of 3,100 crores, which indicates about 300 crores of interest payment. Now, the cement business, the leftover cement business, is generating an EBITDA of 200 crores. So, as you can see, even post the demerger, the interest costs of the group company will completely eat into the profitability of the profit-making cement business. So, that's the concern that the street has at this point in time, and that's the reason why the stock is down 12%.
All right, an important news break, and that has been confirmed right here on CNBC TV 18.